Okay, so in this video, I wanted to cover my top 10 tax deductions or write-offs for rental real estate property. These are the top 7 that I see most frequently across all businesses and individuals that rent property out, both commercial and residential property. Obviously, it's not all inclusive. There's certainly other expenses that can arise, but these are the ones that I see happen most often across most types of rental real estate businesses. So at the top of the list, mortgage interest, right? This is a no-brainer. If you had to finance the property, meaning you had to borrow money from a bank or another third party to fund the purchase price, the interest expense that you're paying is deductible. So if you borrow money from a bank, you'll likely have a fixed payment every month, which will comprise a portion of interest and principal. The interest expense is deducted. Principal is not, right? Remember, so the principal portion of the payment just reduces the carrying balance of the note, and the interest expense is tax deductible for the business, right? And this is reported to you generally on a Form 1098 every year. If you also had to have mortgage insurance premiums on the property, right? And so those apply if you basically didn't put up enough cash to be able to purchase the property, right? So if it's below certain thresholds, you're looking at loan to value thresholds, you might have to purchase mortgage insurance. And so those premiums are a tax deductible expense for your rental real estate business. Second in line, rental property taxes. So the real estate taxes are also 100% deductible for rental properties. And this includes both the ad valorem and non-ad valorem portions, right? So the ad valorem portion is that portion of the county tax that's assessed on the value of the property. And then the non-ad valorem portion is not based on the value, but more on kind of where you're located. So if you live in a deed restricted or managed community, they might have a non-ad valorem portion. And the reason why I separate those two out is because a lot of people, for your principal residence, you can deduct real estate taxes as an itemized deduction. But under the regs, you're actually only allowed to deduct the ad valorem portion. And a lot of people don't know that. So the non-ad valorem portion on your principal residence, so this is your personal home, you can't deduct that piece. But when you run a rental property business, you can deduct the whole thing because all these expenses are in connection with the trade or business of that rental property. So you can deduct all of your property tax bill. Third item on the list, depreciation expense. Residential property depreciated over a 27.5-year period. Commercial property is 39. And very important here to note that you can only depreciate the portion of the purchase that's attributed to the structure, right? So the building itself. Land is not a depreciable asset. So here, for example, we have Bob buys a house for $150K. And based on his estimate, 125 is going to be the purchase price of the building, 25K to the land. So Bob can depreciate the building of 125K over a 27.5-year useful life. The $25,000 of land it's an asset, but it's not depreciable, right? So it's certainly still factored into his cost basis when he goes to sell the property, but after that, he's not going to owe anything on it. So the fourth item on the list is legal, professional, and accounting fees, right? So these are payments made to lawyers, accountants, in connection with the rental property business, right? So if you had to hire a lawyer to draft a lease agreement, if you pay an accounting firm to do your taxes or to do your books for the rental property, that's a deductible expense. So those, very frequently you see those in there. And then property management fees. So if you hired a third-party company to manage the property for you, that fee is tax deductible as well. Now, a lot of, if you have maybe one residential property, you might not have a property management company, you might just do it yourself, and that's fine. But if you do hire a third-party company to help you with that, then the fee that you pay them is deductible. And normally that's computed based on a percentage of the rent, right? Number 6, repairs and maintenance expense. So if you've got to hire contractors, repairmen to come and renovate the property or fix something, their labor and the cost of materials are all deductible expenses. Where you want to be careful is if you make a substantial improvement. So if you put on a new roof or something like that, those costs incurred in putting on the new roof are generally capitalized because they have a longer useful life than just a simple repair, and it's a substantial cost. Right, but for the most part, if you just have someone come in to fix something, it's a toilet or broken lights or do some landscaping or whatever, that's all just general maintenance, and so that can just be deducted 100% in the year that you pay the expense. And then last but not least, we have insurance, right? So homeowners insurance for a property, fully deductible. And then if you purchase additional coverage because you're renting the property, right? So generally there are two separate policies. If you do buy some additional coverage because you've got a tenant in there, again, that's a business expense. So those premiums are tax deductible as well. So that covers the top 7 lists. Thanks for watching. If you have any questions, please leave me a comment below. And I look forward to seeing you again on the next video. Thanks.